Welcome back to Global Government News. This is the second part of this economic news bulletin for August 12th, 2010. We're finishing up on this article, 15 economic statistics that just keep getting worse from the economic collapse, blog.com. We move down to number 5. We already covered this, that the U.S. government has spent $355 billion so far in 2010. And it says the U.S. government will be spending $2 trillion just on interest on the national debt by 2020. Keep in mind that the entire U.S. government budget is less than $4 trillion for the entire year of 2010. Number 6, if the U.S. was forced to use GAAP accounting principles like all publicly traded corporations must, the annual U.S. government budget deficit would be somewhere in the neighborhood of $4 trillion to $5 trillion. Number 7, Social Security will pay out more benefits in 2010 than it receives in payroll taxes. This was not supposed to happen until at least 2015. In the years ahead, the new Social Security deficits are projected to be absolutely catastrophic. Number 8, there are simply far too many retirees and not nearly enough workers to support them. Back in 1950, each retiree's Social Security benefit was paid for by 16 workers. Today, each retiree's Social Security benefit is paid for by approximately 3.3 workers. Wow. By 2025, it is projected that there will be approximately 2 workers for each retiree. Number 9, wealth continues to become highly concentrated at the top. Since 1973, the average CEO's salary has increased from 26 times the median income to over 300 times the median income. I've covered this already. According to a poll taken in 2009, 61% of Americans always or usually live paycheck to paycheck. Number 11, Mortgage Bankers Association recently announced that more than 10% of all U.S. homeowners with a mortgage had missed at least one mortgage payment during January to the March time period. I recommend you come check these out because I'm not going to have time to cover it all. It just says anyone who claims that things are getting better is either ignorant, completely deluded, or is purposely lying. The U.S. economy is not getting, quote, better. The U.S. economy is dying. You should adjust your plans accordingly. The next article up is from moneynews.com, and it's titled, Report, Food Prices Already Starting to Go Up. Actually, they're saying they're skyrocketing. Experts warn that overall food price inflation is inevitable, as Wal-Mart reportedly has already hiked prices amid a recent jump in wheat prices and the failure of the Russian harvest. The most immediate impact will be felt in the price of bread and bakery products, as other food items which make use of grain will also rise, according to analysis from Verdict Research. This includes some of the meat products where grain is used as animal feed. So yeah, your meat products are going to go up big time. Meanwhile, a recent JPMorgan survey of supermarket pricing in Virginia showed a 5.8% increase in the average prices at Walmart, which represents the most significant sequential increase since the inception of the study in January 2009, the Business Insider reported. And I've been talking about this for about the past 6 months, where I said Walmart prices will start to go up. So enjoy them now. The survey compared a 31-item like-kind basket at a Wal-Mart Supercenter, Kroger, Safeway, Harris Teeter, and Whole Foods. The Business Insider reported. It says, should wheat prices remain elevated for the next few months, shelf prices for many products could go up by 6.7% within a year. Verdict reported some items such as croissants could go up as much as 11%. This next one's from Reuters, just simply U.S. wheat surges 4% on USDA report. This is from today, and it says U.S. wheat futures were up 4% in midday trading on Thursday after the U.S. government cut its forecast of world wheat production more than expected, and soybeans and corn followed wheat higher despite forecasts for record U.S. crop yields. It says chief support came from the U.S. Department of Ag in August in the report that slashed world wheat production by 2.3% to 645.73 million tons, in line with other recent estimates, but more than 650 million tons traders expected. And of course, they blame it on the Russian crop troubles, other Black Sea regions, flooding in Pakistan, and worries about too much rain in Canadian farm fields, all of which have aided a near doubling in U.S. wheat prices to a 2-year high from last week. From Bloomberg, economists cut U.S. growth forecasts as firms limit hiring. A lack of jobs will shackle consumer spending and restrain the U.S. recovery more than previously estimated, according to economists polled by Bloomberg News. GDP will expand at an average of 2.55% annual rate in the last 6 months of 2010, according to the median of 67 estimates in a survey taken July 31st to August 9th. This next article is inflation or deflation. Yes, says Chris Martison, who sees stagflation coming. The Federal Reserve is once again trying to put a floor under the U.S. economy, worried about the threat of deflation, or as Ben Bernanke and company put it, measures of underlying inflation have trended lower in recent quarters. The central bank said Tuesday it would begin to purchase longer-term Treasury secretaries. The second round of quantitative easing is meant to lower mortgage rates, boost the housing market, and increase demand for bank loans. In other words, grow the economy. Yet many reading this must be thinking, what deflation? Prices of gasoline, food, health care, education are all getting more expensive. It says, we're seeing inflation in some areas and deflation in others, he says. And he says, we have a powerful deflationary forces in play right now. It is well balanced so far by what the Fed has done. Martison thinks we're, quote, dangerously close to entering a stage of stagflation that crippled the economy and the market in the 70s. It is the worst of all possible worlds, says Martison. Stagflation really squeezes the workers even harder than any other condition you can experience. Wages are weak, job growth is weak, the main assets that the average person tends to hold, like real estate, that's going down. On the other side, we are seeing base inflation in some commodities. It says stagflation, as defined by Investopedia, is a condition of slow economic growth, relatively high unemployment, and it says a time of stagnation accompanied by rises in prices or inflation. So high inflation, high unemployment. The U.S. dealt with this in the 70s when a recession was met by a spike in global oil prices. This is from the Business Insider. Suddenly it's beginning to look a lot like stagflation. And it says private sector job creation is clearly sputtering. It says private sector job growth is sputtering following an early spring surge. On the other hand, GDP growth is still doing okay. That sounds weird. On the other hand, GDP growth is still doing okay. The economy is growing at a faster pace than it was at a similar point in the time during 1992 in that recovery. It goes on, it says, but food inflation is back on the up. Figure 1, food inflation is reaccelerating. I guess this is where we're at right now. It's not looking too good. And signs point to this trend continuing. Figure 2, the food inflation pipeline is showing a reemergence of price pressures. And consumers will soon feel this at home. Figure 3, food at home is a dominant driver. CPI, I believe that's Consumer Price Index, food, and it's beginning to rise. Meat, poultry, and fruit is where the pain is being felt. Figure 4, several food at home subcategories are showing signs of acceleration. And lastly, energy costs are back on top, which will put more pressure on. And figure 5, energy costs and import prices also point to impending food inflation. This article is from thisismoney.com or .uk. It says, are we on the verge of stagflation? From August 4th, 2010, Hovis maker Premier Foods and British Retailer Consortium today warned that soaring wheat prices will soon be fed through into higher grocery prices. Next, also warned that the global price of cotton could push up clothing prices, and last week, British Gas warned that the rising wholesale gas prices will be pushing up winter fuel bills. So stagflation is the coincidence of rising inflation and slowing economic growth. Weak economic growth is normally associated with low price pressures because the level of demand in the economy is depressed. But if the price pressures come from supply side effects like rising commodity prices, then they become increasingly unrelated to the level of demand or overall economic cycle. Said, and if those commodities are imported, they become impervious to the attempts by which authorities to control prices with such instruments like rate rises. Such a disconnect between price pressures and domestic demand can result in stagflation. With world cotton, wheat, and gas prices rising, the UK faces increases in the cost of some basic consumer needs, food, clothing, and heating, while unemployment is still high and wage growth low or not. And that's what the Keynesians or corporatists will do. They'll raise interest rates like in the 70s. Thank you.